Welcome back, everybody, to another episode from the Whip Report. In front of us, we have the bank reconciliation, a made-up one, from October 31st, 2023. One thing I want to mention is I downloaded this from the Wolters Kluwer website. It was the only one that didn't require an email, so I figured I'd give it a shot. But basic accounting 101, you take your bank statement balance, which is $40,000, and you add in deposits that you've recorded in your accounting software, and you subtract checks that you've written out of your accounting software that haven't cleared the bank. This hasn't hit the bank yet, and neither has this. You add the net amount to your bank balance, and you get the computed book balance. You compare that to what's on the trial balance, and you're left with a difference. We reconcile. That's great. But the one thing you want to look out for is significantly aged deposits and checks. What I mean by that is deposits that were made several months ago, or checks written several months ago, or maybe even over a year or two that haven't cleared the bank yet. That's a little odd. I'm going to focus on just the deposits in this example, but you want to evaluate that on an ongoing basis. See what hasn't cleared and understand why. If you need to rewrite it, you need to submit it as unclaimed property, etc. So in this example, we have a deposit back from January 15th, 2023. All right, that's over 9 months ago, and it still hasn't cleared. The one thing to figure out is if this is a duplicate entry, and it has happened multiple times. Things get busy, and you record a deposit once, or you even record a payment once, and then you turn around and record it again, not knowing that you had originally recorded it. So sticking with this example, let's assume that it is a duplicate, and you did receive $10,000 on the 14th of January, and you deposited that money, and it cleared the bank. And so that cash transaction is done with, but then you went ahead and recorded it again. So now we have an extra $10,000 on the books that doesn't exist. You're overstating your bank balance on your books. So that ultimately says that your cash is wrong. So the way to fix that is to record a journal entry to offset that. Now, if we're in the same fiscal period, obviously 2023 here and 2023 there, you can go ahead and just delete that entry, and it should remove the cash and the offsetting entry. So if it's most likely it's revenue, or if you're recording on accrual basis, it's going to remove that entry to receivables. So let's assume it's not, and this is from 2022. The last thing you want to do is delete a prior period entry. There's ways to fix it. It's just a little more of a headache, but let's assume in this example it is from 2022. Now it's well over a year old. So what we'll do is record a journal entry, which will ultimately credit cash, removing that deposit, and debit the revenue or wherever that entry was recorded to. So the deposit date, let's assume it's going to be this amount, and it's going to be a negative $10,000. It'll either show up in the deposit section or checks or adjustments section. It all depends on what accounting software you're using, but that'll ultimately change your book balance. So if we were to decrease it from 58.5 by 10,000, it'll be 48.5, and we reconcile. And when you're in the process of doing your reconciliation in your accounting software, these two transactions should flush out. So it'll be a clean flush, net impact of 0 on your reconciliation. You'll just get it off your books, and you'll be left with the correct book balance. I hope that all made sense. If it didn't, please leave a comment in the comment section below. But thanks again for tuning in, and I'll see you in the next lesson.